Good evening, everyone. Today, as usual, we are here today to discuss about some good tax saving opportunities. We are doing 21 days, 21 insights. Every day, we want you to just invest 10 minutes only in learning something new. We can continue to grow in our life or career only when we are open to learn the things. In the whole year, we work very hard to earn the money. But if you don't know how to keep the money, what is the point in earning money? So we, AG Fintax, our specialization is extensive research, and today we are sharing some tips today for the high net worth individuals. If you are at higher tax bracket, you can consider these few strategies how to keep the money what you earn and to build the wealth in the long term. In the long term, the first and most important, what type of income you are getting. If there is an opportunity for you to change your income structure, that means if you are in just W2 income, you are obligated to pay very high tax rates, which is up to 37% in federal and state taxes, plus also NIIT, net investment tax. But if you can get this income through a capital gains or some other ways, or business income, then you have some opportunities to reduce your tax liabilities. If you are on W2, you can't even claim your mobile bill. Every month, you might be paying $20, $30 a mobile bill. You can't even claim that money against your W2 income tax reporting. But if you are a business owner, the same income, that means if you are receiving the same income either through 1099 income or in business, it could be an S corporation or LLC or partnership LLC, you have an opportunity to claim different types of expenses. And if it is a capital gain, if you look into millionaires or fast wealth builders like Jeff Bezos, Mark Zuckerberg, and many other people, they don't take millions of dollars in the salary because they have the equity shares in the company. Rather than taking it as a salary, what they do, they if really they want money, they sell the stock and they only pay long-term capital gain tax, which is 23.8%. So how you structure your income is very, very important. If there is an opportunity for you to convert your W2 income to 1099 income, definitely I want you to consider it. That will open up the doors to claim lot of expenses. And number two, number two, investments. When you are on W2, the opportunity to save taxes are very limited. Period. In those limited options, you need to consider the what are the options available are very, very limited, like optimizing your 401k, optimizing your HSA contributions, optimizing your IRA accounts, if any, if you are eligible. The other ways how you can do it is you need to start investing. If you can start reinvesting into the places where you can save taxes, that is where the game starts. In general, whatever earnings we are having, if we are earning more than what is required for our day-to-day life, then we go and invest either in the stock market or real estate, where the average rate of return is only 10%. But if there is an opportunity where you can save taxes on these investments, that's where the game is. There are some opportunities if you are investing in some real estates or some other funds opportunities also we have. There are many businesses where you can invest and you might be able to enjoy the negative depreciation because of the one big beautiful product, 100% bonus depreciation. This year, because of the Trump's new one big beautiful bill, they introduced 100% depreciation if the lifetime of the asset is less than 20 years. If you are investing in the real estate properties or if you're investing in the businesses where there are heavy high depreciable assets are there and which can result in heavy depreciations, that will also help you to optimize your taxes if you meet all required conditions. And if you are at this year compared to the previous years, if you think that this year your incomes are low, try to consider converting your rollover 401ks to IRA accounts. That's a rollover 401ks to or rollover IRAs to Roth IRA accounts. You need to pay the taxes on this conversion, but once you convert this money, money goes tax free forever in your lifetime. And if you are working for a corporate companies like Amazon, Oracle, Microsoft, or Apple, or many other corporates, they if they offer after tax contribution, which can help you today mega backdoor Roth IRA. You can contribute up to 70,000 of dollars if you want to invest through after tax account. So you can contribute up to $23,500 as an employee 401k contribution. There could be few thousands of dollars as an employer contribution. The difference between 70,000 and employee and employer contribution is called after tax contribution. Just go and check with your 401k service provider if your company is offering after tax account. If so, that is a wonderful opportunity for you to contribute total up to $70,000 into your mega backdoor IRA accounts. And backdoor Roth IRAs. If you are high net worth individual, people think you cannot contribute to the Roth IRAs because you are not eligible. Yes, I understand. There are some income limits to contribute to the Roth IRA, but if you are, but there is another opportunity you have for backdoor Roth IRA. Backdoor Roth IRA is like you can open traditional IRA account, you can open Roth IRA account, and you can contribute to the traditional IRA account. From there, you can roll it over to the Roth IRA. You can contribute $7,000. Your spouse can also contribute $7,000. And people think you are not eligible, but you might be. Everyone is eligible, but there are some conditions. Just ensure that you don't have any pre-tax traditional IRA account balances on your name. If you have anything like that, try to convert them to the Roth before end of this year. And HSA, Health Savings Account. You as a family, you can contribute up to $8,550 into your health savings account. And you can enjoy 30-40% in taxes on this contribution. You have time to contribute till end of this year. And if your open enrollment is open till now to choose your medical policy, health insurance policy, to try to find a policy which can allow you to open HSA account, so you can contribute $8,550 every year, so you can keep the money, you can save some money, couple of thousands of dollars in taxes every year from this year onwards. And tax smart investments, as I mentioned, there are a lot of opportunities are available. If you don't have good opportunities, talk to your accountant once to find those investment opportunities, or at least you can talk to me also in offline. And differing your income. If there is any possibility to defer your income to the next year, please consider it. Many corporates offer allows you to defer your W2 income to the future period. If you have such option, you can defer your income to the future period. If you are running a business, don't raise any invoices before December 31st. If you're running a cash, if you're maintaining your books of accounts on cash basis, if you receive the income, if you receive the cash, you need to pay taxes. Rather, you don't even receive the income or don't even raise the invoice. You can defer your income. and accelerate deductions. If there is any possibility, you can pay any expenses before December 31st, like property taxes, interest payments on your properties, or rental payments. If there are any opportunity to do the prepayment if possible, and subject to all the limitations, if you are eligible, you might be able to claim more deductions this year if you can do this before December 31st. Charitable contributions. We are, as a, even you are filing as an individual standard return or itemized return, if you are doing any charitable contributions, you are eligible to get the deductions, but there are some limitations. If you are if you are filing standard return, you can claim up to $2,000 as a charitable contribution, as a charitable deduction. But if it's an itemized return, if you're filing an itemized return, you can go and claim up to 60% of your adjusted gross income as a charitable deduction. So there is still December 31st, there is a good opportunity where you can go and do some charitable donations to save your taxes. And before December 31st, if you are a self-employed, and if you don't have a proper entity structuring, or if you don't have an S corporation, explore if S corporation is the right option for you, and convert your LLC to the S corporation to optimize 15.3% social security taxes. Yes. So with this, from few basic steps, apart from the optimizing your 401k, optimizing your HSA account contributions, optimizing your tax smart investment strategies, focus on your 401k, backdoor rata IRA, mega backdoor rata IRA, entity conversions, deferring your income, accelerating your deductions. If you can implement these strategies, so definitely we can see some good tax saving opportunities. And thank you very much for today. Again, tomorrow, same time, we will join the session with some new learnings. And stay tuned for tomorrow again. Thank you.